Class 12 Accountancy Numerical Problem Solutions presented by edukse.com. In this video, we are going to provide Accounting for Partnership Basic Concepts, Distribution of Profits Solutions. Problem 27 Solution. The problem statement is as follows. On March 31st, 2000 XA, after the close of books of accounts, the capital accounts of Ram, Shyam and Mohan showed balance of 24,000 rupees, 18,000 rupees and 12,000 rupees respectively. It was later discovered that interest on capital at the rate of 5% had been omitted. The profit for the year ended March 31st, 2000 XA amounted to 36,000 rupees and the partners' drawings had been Ram 3,600 rupees, Shyam 4,500 rupees and Mohan 2,700 rupees. The profit sharing ratio of Ram, Shyam and Mohan was 3:2:1. Calculate interest on capital. So, in this problem, we are asked to calculate the interest on capital. It is also given that the books of the firm are closed on March 31st, 2000 XA, and on that day, the capitals of the three partners are 24,000 rupees, 18,000 rupees and 12,000 rupees respectively. It is also given that the interest on capital is at the rate of 5% per annum. Now, to calculate the interest on capital, we use the formula interest on capital is equal to the opening capital multiplied with the interest rate upon 100. So, if we know the opening capital, we can calculate the interest on capital. But what is given to us in the problem is the closing capital. It's not opening capital. But no worries, we can still find the opening capital and from that we can calculate the interest on capital. Now, if we know the opening capital, see here we don't know the opening capital. But in case if we know the opening capital and to that we add the interest on capital and lessen the drawings and add the profit share, it would give us the closing capital. But in the problem, it's given to us that the interest on capital was not considered and was omitted. So here, let's not consider the addition of interest on capital. Let's lessen the drawings and add the profit share. Now, our aim is not to calculate the closing capital. To find the interest on capital, we should know the opening capital. So, let us keep the opening capital on the left hand side and let us send these drawings to the right. Let us also send this profit share to the right. So, we get this as opening capital is equal to closing capital add drawings and lessen profit share. See, we are lessening the drawings on the left hand side. So, if we send the drawings to the right, we should add the drawings. Similarly, we are adding the profit share on the left side. So, if we send the profit share to the right, we should lessen it. So, to calculate the opening capital, we need to know the closing capital, the drawings and the profit share of each partner. Now, it is given in the problem that the closing capitals of the partners are 24,000 rupees, 18,000 rupees and 12,000 rupees respectively. It is also given that their drawings are 3,600 rupees, 4,500 rupees and 2,700 rupees. These two things are directly given to us. But the profit share is not directly given to us. But instead, it is given that the profit for the year is amounted to 36,000 rupees. From this, we have to find the profit share. Now, to calculate the profit share of each partner, we need to find the net profit that should be distributed among the partners. See, the net profit is not directly distributed to the partners, right? From the net profit, we have to allocate the appropriations and then the remaining profit should be distributed among the partners. So, the distributable profit can be calculated by considering the net profit and then from that we lessen the interest on capital. Now, it is given in the problem that the interest on capital was not considered or omitted. So, the net profit is distributed among the partners without considering the interest on capital. In other words, all the net profit is distributed among the partners. Now, it is given in the problem that the profit sharing ratio of the partners is 3:2:1. Considering this, the profit share of the partner Ram will be equal to the total net profit amount of 36,000 rupees multiplied with his profit sharing ratio 3 upon 6. Cancelling with 6, 6 ones are 6, 6,000s are. Now, if we multiply the remaining 6,000 rupees and 3, we get 18,000 rupees. This is the profit share of the partner Ram. Now, the profit share of the partner Shyam will be equal to the total net profit amount of 36,000 rupees multiplied with his profit sharing ratio of 2 upon 6. Cancelling with 6, 6 ones are 6, 6,000s are. Now, if we multiply the remaining 6,000 rupees and 2, we get 12,000 rupees. This is the profit share of the partner Shyam. Now, the profit share of the partner Mohan will be equal to the total net profit amount of 36,000 rupees multiplied with his profit sharing ratio 1 upon 6. Cancelling with 6, 6 ones are 6, 6,000s are. The resulting value of this calculation is 6,000 rupees. This is the profit share of the partner Mohan. So, now we have everything to find the opening capital as well as the interest on capital. Let's first write the heading Calculation of Interest on Capital. In a table, let us have a column for amount in rupees for partner Ram, one column for amount in rupees for partner Shyam, and one last column for amount in rupees for partner Mohan. Let's first write closing capital of each partner. Just to remind you, the closing capital of each partner is given as 24,000 rupees, 18,000 rupees, and 12,000 rupees. Let's write this in our table. 24,000 rupees, 18,000 rupees, 12,000 rupees. To this, let us add the drawings made by each partner. Just to remind you, the drawings made by each partner are given as 3,600 rupees, 4,500 rupees, and 2,700 rupees. Let's write this in our table. 3,600 rupees, 4,500 rupees, 2,700 rupees. Now, as per the formula, we have to lessen the profit share. And as we have just now calculated that the profit share of the partner Ram is 18,000 rupees, the profit share of the partner Shyam is 12,000 rupees, and the profit share of the partner Mohan is 6,000 rupees. So let's write less profit share. Let's write the profit shares of the individual partners as 18,000 rupees, 12,000 rupees, and 6,000 rupees. Now we have everything to calculate the opening capital. For partner Ram, from the sum of 24,000 rupees and 3,600 rupees, if we subtract 18,000 rupees, we get 9,600 rupees. For partner Shyam, from the sum of 18,000 rupees and 4,500 rupees, if we subtract 12,000 rupees, we get 10,500 rupees. For partner Mohan, from the sum of 12,000 rupees and 2,700 rupees, if we subtract 6,000 rupees, we get 8,700 rupees. Now, as we know the opening capital, we can now calculate the interest on capital. Just to remind you, the formula for calculating the interest on capital is given as interest on capital is equal to opening capital multiplied with the interest rate on capital upon 100. Also, the interest rate on capital is at the rate of 5% per annum. So, with this information, let us calculate the interest on capital. Now, the interest on capital for the partner Ram is his opening capital amount of 9,600 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for both the zeros in 9,600 rupees. Now, if we multiply the remaining 96 and 5, we get 480 rupees. This is the interest on the partner Ram's capital. Now, the interest on capital for the partner Shyam is his opening capital amount of 10,500 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for both the zeros in 10,500 rupees. Now, if we multiply the remaining 105 and 5, we get 525 rupees. This is the interest on the partner Shyam's capital. Now, the interest on capital for the partner Mohan is his opening capital amount of 8,700 rupees multiplied with the rate of interest on capital, which is 5 upon 100. Let's cancel both the zeros in 100 for both the zeros in 8,700 rupees. Now, if we multiply the remaining 87 and 5, we get 435 rupees. This is the interest on the partner Mohan's capital. And with that, we have come to the end of the solution to this problem. Thanks for watching. Edixit.com is started to promote effective and efficient learning process to help the students with their learning requirements. To watch all our videos, please subscribe to our channel. Also, please click on the bell icon to receive a notification as soon as a new video is published. Please click on the like button if you like this video. Thanks for watching.